with the SBA, they are very favorable when it comes to high leverage. They could be in a first. You could have a seller in the second position, dropping the total DSCR, which is how they will scale their leverage. There's ways to do SBA deals right now with 0 to 5% out of your pocket.
Welcome to Truly Passive Income. I'm Neil Henderson.
And I'm Clint Harris.
And I'm Levi Hemingway.
We're back with my good friend, Fernando Angelucci. If this is part 2 of a 2-part episode, if you haven't already listened to the episode before, highly recommend you go back and listen to that one. Quick intro on Fernando. He's the CEO of Self-Storage Syndicated Equities. He's a seasoned real estate investor. He's got $220 million in self-storage investments, global traveler. And we're going to dig a little bit more into his travel here and the self-storage market. That's kind of where I wanted to go with that. So, Fernando, you've been investing in self-storage since 2018. You've had a lot of exits of all different stripes. What are you seeing? What's your general sentiment on what we're seeing in the self-storage market right now?
Yeah, it's a super exciting time to be in self-storage. So we are basically in the trough of the investment cycle for self-storage. We have seen this, during COVID, we had this artificial increase in occupancy and rent raises because, people had to start working from home. The kids had to start going to school from home. So all of a sudden now you just lost 1 to 2 bedrooms in your house, and those end up going to storage. All that is gone now. So we have seen occupancy go from like a historic high 96% plus occupancy back to what is typically normal, which is around, an 85% being considered a stabilized facility. Again, over the 2 main years of the pandemic, we saw over 80% year over year rent growth. That was insane, right? And so now we're seeing that being pulled back. The last 18 months, that has pulled back quite a bit, but the velocity at which it has pulled back has now reversed as of last quarter or 2 quarters ago. So now we're starting to see occupancies are starting to cusp back up. We're starting to see rent increases occurring across facilities, not only us, but the REITs as well. So I think now is the time to get in. We're still in a, air quotes, high interest rate environment. I think we may see some relief from that over the next 2 to 3 years. So it's kind of like that old adage, marry the house, but date the rate, marry the self-storage facility, but date the rate. I think now is the time to get in. Sellers have finally started coming to the table. They're more willing to, participate in some type of creative structure, either seller finance or seller equity. And banks are less spooked from the fallout of, Silicon Valley Bank and Signature Bank going down and this scare of lack of liquidity in the market. So I think now is a good time to kind of ride that wave back up. I recently was at the Great Lakes SSA meeting. And there was this fantastic economist that came and spoke. He's been doing it for like 60 years. I forgot his name, but I'll get it for you later. And he said right now, the name of the game is survive until 25 and you'll be in heaven in 27, right?
I like the second part of that. We've heard the survive to 25, but the heaven in 27.
And then we also say get your ass kicked until 26.
No, I like his.
I like his better. Yeah.
We're stealing that. Yeah.
So I like the fact that you mentioned something that was in the early part of this interview, which is in the previous episode. So I really hope everybody goes back and listen to that. And I can't stop thinking about the way that you look at your deals and you think about the law of diminishing returns and letting that guide you deciding what's the next part of the business plan. I also love the way that you're having a macroeconomic view on not just, I tend to get stuck looking at the deal, right? Focusing on this deal and where we are. And I think that there's real value in your mentality of, look, let's look at the deal, but let's look at where we're going, right? Where are we going to be? And, good, bad, or ugly, that's going to help dictate what I'm doing now. And then obviously you're looking at the law of diminishing returns. It can not only be affected by where you are in the development cycle for that project, it can be affected by where you are in the cycle of what's happening with the financial market. And I think that it's a moving target there. And you have to kind of keep relearning what the highest and best use of this property is based upon what you think the market is doing. And you've got, we use the analogy of you can't change the wind, but you can adjust your sails. And you're trying to navigate that. So I love that mentality. And I think it's really important to point that out. I also think that each individual deal, you've talked about 5 different strategies, the new development, the expansion, the conversion, the operational turnaround, and also wholesaling deals. And each of those probably has a different analysis in terms of looking at that from the law of diminishing returns. Specifically, I want to ask a selfish question about conversions. That's basically all that we do. We've done everything in the past, but we're doing conversions, and we're looking at properties that we're all in on for $4 million. And we just got an appraisal back that at CO, we've got a property that's going to be worth 11.3. At stabilization, it's worth 13.4. And it's going to take us 2 to 2.5 years to stabilize this facility. And so it's when you're looking at that from the law of diminishing returns, what's the metric that you're using to decide okay, this is 11.3 at CO. I can sell this now, understanding that in the current market, I'm going to sell it at a discount versus it's going to be worth, 13.4 in the future, but it's 2.5 years there. And what could I do with that capital in the meantime if I redeployed it on a new curve? So in that scenario, tell me how your brain's working and what are the metrics that you're using?
Yeah, great question. So maybe about 2 years ago, we decided to kind of change our internal structure where now we are always ready to sell is kind of the broad term that we use. But what goes into always being ready to sell? Well, the number one thing is where is the market going to be when we decide to sell? So actually doing a very realistic analysis of, okay, so if we sell today, what are we actually going to get? Regardless of what the appraisal says. If we sell 6 months from now, what are we actually going to get? If we sell, 18 months from now, what are we actually going to get? And then you just run an internal rate of return calculation. And anywhere where I see the IRR is the highest, that is the point where I'm going to sell, not necessarily wait until this thing is stabilized. So, for example, you may realize that, hey, it's not going to make sense to hold this asset, take on that lease up risk to maybe get $13 million at the end of this, investment cycle. And that's assuming everything stays the same as far as the assumptions that you're using today or when you underwrote or when that appraisal was given, right? God forbid, what happens if there's World War III? What happens if, Taiwan gets invaded? Who knows, right?
Or a competitor, a massive competitor enters the market.
Yeah. Or just a dumb competitor that enters the market and they don't do any supply index studies. This has happened to one of our facilities. We were already in a basically saturated market and somebody came in and plopped 120,000 square feet down like an idiot, which destroyed everything, right? Not only for him, but for everyone else in the market to get rid of. So the way I look at it is you got a bird in the hand or 2 in the bush. I'm always going to take the 1 in the hand because I know my unknowns here. The problem with the 2 in the bush is there's unknown unknowns. You don't even know what can happen that can affect that value. I mean, this happened on another one of our deals. We had a deal. It was a small deal. When we bought it, the appraised value was sky high, but then all of a sudden interest rates went up 4%. And now that's we're not going to be able to sell for that sky high as completed appraisal, right? So I'd rather take money off the table. And the biggest thing is being ready to sell at any moment, which truly means in your Excel calculations, you need to know what is the minimum that you are willing to take at any month in that investment period. And that can be hard to underestimate, to underwrite sometimes. But we all have teams of brokers. We all have teams of appraisers that we know, and we can just ask them, say, hypothetically, I got a deal. It's 30% occupied. We got CO, who knows, 6 months ago. Today, what do you think this thing is going to be worth if, and this is the keyword I give the vendors, if I wanted to fire sell it in 30 days? Because every broker is going to give you some pie in the sky number because they think that it's a potential listing deal, right? So you got to say, hey, I have to move it and I have to be under contract in 30 days. If I'm not under contract in 30 days, you're fired. So what price do we need to go out so that this thing is 100% going to be under contract in 30 days? And now you have the lower bound, right? You always have the lower bound. And then you can run that IRR calculation, which is kind of like that diminishing return Laffer curve. And as soon as you see the RI start to dip again, that's your sale date.
Yeah.
I love that. We got a lot of homework to do.
Yeah, no kidding. No, I mean, like literally I'm sitting here, we had a facility recently that it was not in our model to sell. But all of a sudden we had a bunch of off-market offers coming in, like really high offers, not official. There was a facility down the street that sold, similar facility that sold for a really great price. And then suddenly brokers start coming around and telling you, oh, look at this. And so we went out, and first mistake we made was we told our investors we were listing it, which was not in our original business plan. There's going to be a long-term hold.
Mm-hmm.
And then it hits the market, and the market had changed. I mean, literally within 3 months, the market had changed.
Yeah.
And now, and then we're looking at like, we could have sold it. We could have actually gotten a good return. We could have gotten our investors' return, and a little bit better in 2 years rather than, 5 years down the road. But for us, we're like, but we think it's going to be worth a lot more in another 3 years. And so we like, no, we're not going to do it. But that's a great point. You don't think about that as the brokers that are going to come to you are going to pump sunshine up your ass, essentially.
Yeah.
Well, I think personally, I think the biggest difference there is you're thinking about, how am I going to redeploy this capital, right? How is this going to scale my business to the next level, right? Like, I love your mindset of, I don't want to sell to another Fernando. I want to sell to the bigger guys. I want to sell to the next level up. And if you're thinking about that, I mean, I think that's a good business owner. That's a good strategic mindset. That's we talked about traction in the first episode. That's about scaling. It's about, not that you have to grow the biggest business in the world and you've got to compete with Public Storage. And, but if you want to scale your business, if you have ambitions, if you have goals, there's always going to be a next level to unlock there. And so you're thinking of it, what I'm getting from your mindset is, it's very much like, I'm going to take some chips off the table, but I'm always looking at, what is the strategic move here? What is the strategic growth for the business, for my investors, for my life? You talked about traveling and truly having no boss, being a nomad. There's a plug there.
That's great. I love that.
Yeah. Shameless. No.
Yeah.
But I think that's the biggest difference personally, is that mindset is like, hey, I'm not just gonna clear, sell a property and do nothing with it. I'm gonna leverage it to the next great thing.
Mm-hmm. Yeah. And so there's another thing that I would see it, Clint. There's another thing that I'd point out, which is, someone told this to me a long time ago when I was still a young buck. And he said, if someone is offering you a price for your property that you would be unwilling to buy your own property at that price today, that means that you're a seller. So when you guys got that offer, that off-market offer on that one property, would you have bought your property at that price during that time?
No.
Then you should have sold.
Maybe we can still get him back.
Yeah.
No, but I love that. I mean, that's a great point, right? That's a great, just quick, gut check moment in there. And I love that. It's just super valuable, especially for us, active operators in the storage spaces. That's a great one.
Yeah. So I've got one more storage question. Then I want to get into the fun stuff about travel and living like a nomad. Part of the reason you've been able to be so successful, and I highly recommend, if you're somebody who's interested in self-storage, you look up our episode called The Road to Family Freedom. And it was episode 76, where we interviewed Fernando about filling his self-storage funnel to see what machine that Fernando had set up. And this is back in November of 2020. So I can only imagine now, but you came from a wholesaler background. You were just dialed in. You just figured out that what a numbers game it is to just constantly reaching out to storage owners to get them on the phone, to make contact. And then you have to be very, very strategic and build a relationship with this person, to then be the first person they think of when they decide to sell, and also be having those conversations with them where it makes sense for them to sell. Like, hey, I'm 60 now. I'd like to get out. Maybe I'm not going to be able to sell this for top dollar, but maybe I can sell it to these people for, do a seller finance where I get a good chunk of my money back. And then now I'm totally out of the business, but I'm still getting a cash flow from it. So I want you don't have to walk through your entire funnel. Go back and listen to that Road to Family Freedom episode if you want to listen to that. But talk to me about like what that machine looks for you right now.
Yeah. So I think the important thing to have everybody realize is that real estate is not a real estate business. Real estate is a marketing business. If you want to do real estate at scale, you need to run a marketing company. That's just what it is. And just how we were talking about the strategy of marketing to raise capital from real estate investors using the internet, you can use the same exact strategy for sellers as well. The only caveat is you can also, where these sellers are, so you can approach them in different areas as well. Self-storage associations, really great. ISS, SSA National, fantastic. When you join the SSA, depending on which ones you join, sometimes you get a list of all the other members in the SSA. And instead of reaching out trying to be a sales call, you can reach out and just say, hey, this is Fernando. I'm a fellow owner. We're in the SSA together. I was wondering if I could buy you some coffee or chat with you when you're at the SSA, or if you ever have a need for anything, try to change the frame to it being one of, let me provide value for you first. Let me lead with contribution. Do you need a property manager, an insurance guy? Have you ever thought about putting solar on your facility? What can I do to help out? Right. And the thing with storage is they don't typically transact as fast as some other asset classes. And it's very rare to find storage in a situation where there is a seller that truly is motivated because of, like financial issues. That doesn't typically happen in our industry. Everyone says, well, if I don't sell it, I just keep collecting the cash that's pumping out, right? It's not a big deal. So you have to figure out what are the true motivations. And you hit the nail right on the head, Neil. A lot of the guys and gals we talk to, I'm looking to retire. I just don't want to do this anymore. I want to travel. I want to live the rest of my life out. But maybe I still like some of that cash flow to be coming in each month. So open the door for some type of seller finance. So we have a pretty interesting campaign. We have gotten rid of text message and email reach out just because of the TCPA laws are so strong now. And same thing with the CAN Spam Act. I don't want to have to pay out $100,000 of my marketing money in a lawsuit because I accidentally emailed or texted the wrong person. Cold calling has still been working really well. Direct mail, not as great for a cold reach, but really good for follow-up. Let's say we met at the SSA or we already talked on the phone. It's crazy how much just a small handwritten card can go as far as buying goodwill with someone and buying respect. Our newest addition to our team, Ed Patterson, he is fantastic at this. Anytime he talks to somebody on the phone and the seller spends time, actually willing to answer questions, he just writes them a handwritten card on, a tiny little card, throws it in the mail, and the responses we get from that is absolutely fantastic. And then, now instead of just doing a completely blanket marketing campaign like we did before that I talked about in the previous podcast on the Road to Family Freedom, we're getting a little bit more targeted now because like you were mentioning, Levi, talking about where we want to go and specifically focusing on our exit strategies as opposed to just buying any deal just because the numbers look like a good deal without thinking of how am I going to get rid of it to not another Fernando, but to someone that's got cheaper cost of capital. There's just a lot of deals that they just don't make sense anymore, right? Buying anything under 50,000 a month in gross revenue, going to be really hard to move that to someone larger because someone larger is going to be paying for a third party manager. It doesn't mean you can't make money off of those smaller deals, let's say via wholesale, to someone that's just getting started out that is going to sit behind the desk themselves, right? Like me and Steven did for the first, even though we technically didn't have a desk, but we managed it ourselves. So you can still rip, 25 to 200K as a wholesale fee on those deals, which is, on the invested capital, which would be the marketing dollars and the earnest money, that could be like a 3,000% return pretty quickly, right? So yeah, the focus, like I said before, is right now we're focusing specifically on products, on stores that we can easily get financed, either through local banks or now even better through the Small Business Administration. The SBA has recently changed the rules that now they allow for syndications. The vetting process of the money has been completely changed. I think it's reduced down to 30 days now, which means if you raise the capital, let it sit in a bank account for 30 days, and then go out to the SBA, it's much easier to get those approved. And with the SBA, they are very favorable when it comes to high leverage and working with creative structures. You know, they could be in a first, you could have a seller second, in the second position, dropping the total DSCR, which is how they will scale their leverage. And then they'll even allow you to have the seller contribute equity to the deal for your 5 to 10% down that you need if you're able to max the leverage. So there's ways to do SBA deals right now with 0 to 5% out of your pocket. So if you only have to raise 5%, imagine the IRR that you can give to your investors and the buffer behind that IRR if anything happens that was not according to plan, that you can eat into the GP ownership to make sure that you're making your investors whole. So those are the types of deals that we're going after specifically, are deals that are the easiest to finance and the easiest to raise equity for, which basically means it needs to have cash flow and it needs to have some type of component of value add, ideally, expansion, where I can really push value in a 3 to 5 year period of time.
Yes. So we did SBA on one of our first projects as well. And, like you said earlier, it's another tool in your tool belt, because there is caps on SBA, right? There's exposure limits. And so I'm sure you're playing with those, using it as a tool to acquire, and then maybe refinancing out with some different debt to kind of open up that line of credit again.
Well, actually, so if you go via the 504 green route, and to qualify for the green loan, you need to be able to self-generate at least 15% of the total power usage you do. If you do that, you are not capped on the number of green loans that you can have out at any given time.
So you're talking like solar?
Yeah. So we do a solar study. I tell my guy, just to be safe, I just need an analysis that says I could put, I can offset 20% just in case I don't hit the 15 rate, 20% of what I'm going to use. Give me the system, and then boom, you can start stacking them.
That is a nugget of wisdom right there, Fernando. Yeah. That's incredible. I can tell you we're going to look into that after this podcast. Yeah.
Hit up my girl at Live Oak Bank, Ann Mino. She's really good. She knows how to put these things together.
Well, she's local.
Live Oak Bank is based in Wilmington, North Carolina. Yeah. So we'll go swing by and do some lunch there or something. Yeah. But no, I think that speaks volumes to the kind of just the kind of value that you provide to to everyone you talk to, and I think that's really cool. And I think that's what this business is about at the end of the day. It's providing value. I love what you said on the first episode that, hey, I'm always available to, overlook a deal, check the underwriting, lend a balance sheet, just you want to help people succeed. And I think that just speaks volumes to your character. Last storage question before we transition into travel. Do you foresee your company getting into any other asset classes other than self-storage, or is it double down on storage and keep riding the wave?
This is a fantastic question. If you were to ask this 6 months ago, I would have said no. But recently, what we've been looking at is what I call pro storage. So these 1,000 to 2,000 square foot, like mini warehouse. Because here's what we've noticed what's happened. Typically, those size units were taken by the, general or the subcontractor's got a small business. He needs a shop that has a little bit of electrical use, high bay doors, you can drive his truck in, that type of stuff. But with the proliferation of last mile shipping, specifically the Amazon rise over COVID, Amazon, they have their main distribution warehouse somewhere in a large city. It's got whatever, 1 million plus square feet. But then they have these little last mile areas that are only like 1,000 to 5,000 feet, just so that you can go on Amazon and say, hey, I want this product. And all of a sudden you have an option, like you can get it today. The only way you can get that today is because of these little last mile locations that are scattered around their main shipping hubs in each of their MSAs. And they have been coming in and doing what Amazon does, throwing their weight around and just overpaying so that they can secure what they need to grow their infrastructure. And that's pushing all of these small contractors out of those units. So now what we're seeing is, in the past, those type of units, because they were so large, your rent per square foot was really low, right? You're getting maybe max 50 cents per foot per month, $6 a year. But all of a sudden, over the last 2 years, 3 years, with this whole roll up after COVID of these last mile shipping locations, you're seeing that not only if you get one of these things, they will not stay vacant for more than a day, but you're also getting anywhere between $1 to $2 a foot per month. That's great. $12 to $24 a foot per year on these type of units for tenants that will stay literally until their business grows so large that they can buy their own warehouse. They won't leave. And then, they're paying whatever, call $1,000 or $2,000 a month for this space, but they have literally hundreds of thousands of dollars of equipment inside of these. They're never leaving. They won't leave until their business is large enough. So that's one of the options, would be kind of the pro storage.
We should connect after this podcast.
Yeah, okay.
Unpack that a little bit more. So still the idea of storage, but maybe some things, and I think that's a very interesting shift, and very very much along the lines of self-storage, but maybe a reiteration of it in some ways. The man cave idea, I know, is a strategy that's popping up. Sort of the luxury units, but we can talk storage for a long time. I'll transition now.
Well, listen, this has been a fantastic conversation. I've been having a lot of fun. We love talking about self-storage, but let's talk about some stuff that maybe other people think is fun, which is travel, and living like a nomad. Levi, I don't know if you know this. The reason it's called Nomad Capital is because Eric and his wife Rachel, back in 2008, after they built their first self-storage facility in Prescott, Arizona, ended up buying a 35-foot sailing catamaran in Greece, sight unseen. Flew out there planning to sail for maybe a year with the 2 adults and at the time 5 kids, and they sailed around the Mediterranean for 3.5 years. Had their 6th child in Israel in the first year, right? And then ended up sailing across the Atlantic, eventually making landfall in Wilmington, North Carolina, where they call home. And so, for us, it's a passion. Like we're not doing this just because we want to have big bank balance sheets. We're doing this because we want to live life to the fullest. And one of the ways that we think you can do that is travel. And income arbitrage, all that. So you've done that. Talk to us a little bit about that experience, and we'll go from there.
Yeah. So I'm a big fan of Tim Ferriss. His book, The 4-Hour Work Week, is kind of what got this small idea popping around in my head. For those that haven't read the book, it's basically how do you create a system for your business that allows you to basically work 4 hours a week. That's, I think, a little difficult for our business, but we could still strive to get close. And then he did a foreword for a book by Rolf Potts called Vagabonding: The Forgotten Art of Long-Term World Travel. And if you've never read it, I really recommend it. It is eye-opening. Basically, the premise of the book is most people, they wait until they're retired, and when their body is broken down and they can no longer, hike the Alhambra themselves to then go travel. And it's like, why do you want to go travel when, the best years physically that you have are gone? That's crazy, right? And how there's ways that you can do this, taking basically mini retirements through time. Or if you don't want to take a mini retirement, you can work while traveling. So instead of me, finishing in the day here in Chicago and then going out and getting a deep dish pizza, I finish the day in Spain and then go out and go have some paella, And that's still possible, especially in the day that we live in today, where basically we can run our entire business as long as you have an internet connection. And even if you don't have an internet connection, you can pay for these GPS Wi-Fi devices that read off of cellular data. So completely feasible and doable. The book itself, for those that are listening out there that think you need to have a big bank to do this, you don't. The book itself is, most of the examples are people that are students or didn't have a job and they'd work on farms as they would travel. And then another one that I always get from people is like, oh, I can't do that because I have kids. Well, clearly from your guys' example, that is an excuse. A lot of the examples in the books are also with people with children, small children. And so I read this for the first time like 7 years ago, and I fell in love with the book, and then, got kind of caught up with building the business and, making excuses. And then when I was moving my office one day, like 4 or 5 years later, I found the book and I just said, Fernando, you piece of shit. You promised yourself that you would do this. And here you are staring your own failure in the face. Like, what excuses do you have now? And so from that second on, and this was right after we did the large portfolio sale. So I had some nomad capital to play with.
Well played.
Thank you.
You're welcome. And so I said, you know what? I'm going to do it right now. If I don't do it now, I'm never going to do it. So within a period of maybe 2 to 3 weeks, I gave away / sold almost all of my possessions. I still have a bed. It's in my brother's house. I probably will never get it back, but everything I have fits in this backpack. Oh, you can't see it. It's all black. This backpack, and then this duffel bag behind me right now. And that's literally all of my possessions. It's crazy as a self-storage owner that I basically don't own anything. But that has given me the freedom to truly, literally walk into O'Hare at any time and say, you know what? Portugal sounds fun. Let's jump on a plane today and go. And that has been such an amazing journey for me because it has forced me to find the cracks in my business that required my physical presence in the United States. So it forced me to create a system around the business. So the business actually got better when I started traveling. For example, what happens when you need to sign bank docs and get them notarized and you're in South America? How does one do that? You figure out real quick how to put systems in place to do that, right? The second thing, it has given me such a appreciation for the United States. Like it drives me crazy to hear so many people bitching about how bad our country is when those people have probably never traveled for more than like 2 weeks at a time. And when they did travel, they went to some resort that kept them away from the poverty of the rest of the world. I typically travel not like that. I'm typically staying in hostels. Sometimes I find people in the bar that let me stay on their couch, like just to like be in the actual culture themselves and meet people that are true people, not just people that work at some 5-star resort. And that has given me such an appreciation for how amazing our country is, like truly the greatest country in the world. If you are someone that is a go-getter, like we have all of the resources. Anyone can be successful if they want it. And it also makes you really humble because then you start to, in the United States, we have a lot of xenophobia. People are just afraid of people that are not like them or are not from the United States, which is a crazy thing to say because everyone from the United States is not from the United States. We're all immigrants. If you go back at least 5 generations, most likely you're not one of the people that came on the Mayflower. So, and even the Mayflower people were immigrants, right? So it's given me a really profound appreciation of other backgrounds and culture, which has translated into raising capital because I meet people all over the world. I learn about their cultures. And then when I meet someone of that type of descent here in the United States and they're an equity investor, very quickly I can connect. I know what their culture is like, where they came from, what their values are. So it just makes you a better, well-rounded person. And then it's just super fun to, be able to see the world, see the things that you only hear about. Like I climbed the Cristo in Rio de Janeiro and I got to, stare around and see like what it was like to be in Brazil. I stayed in a favela. I literally, I on New Year's Eve, or the 3 days leading up to New Year's Eve in Rio, I stayed in a favela because there was no other place that was available. And it, everyone thinks that it's super dangerous. And 99% of the people in the favela were like amazing people that were just happened to be, slightly poorer than the rest of the population. They needed a place to live, but they were hardworking people and it was super safe. So it truly has been, it's so funny when people ask me like, hey, Fernando, how you're doing? And my standard answer is literally, I'm living the dream. I'm living my dream right now. Like this is the whole purpose that I started in entrepreneurship when I was 19 years old, was to get to this point.
I love everything about what you just said. I love the travel aspect. I love, Neil told the story, but we spent, almost 4 years traveling abroad. And, I absolutely agree with everything you said. I think it just changes, for me, it just changes your perspective on the world. It changes your perspective on what's out there and truly how grateful we are, how good we have it in this country. It's just eye-opening. And you're right. You take these things into the business, right? You take in how you talk to investors, how you approach problems, like how you solve problems, how you think about what is actually a problem or what is, and not really a problem. It's an America problem. And so I truly think I think it's, not only is it fun and incredible to see the world, but I think it gives you a perspective that is valuable. I mean, it just broadens your horizon of what you think is feasible and possible. And yes, 99.9% of the world, in my opinion, is good people. There's so many, people can get scared of traveling outside the US, the story you told. And we were told the same thing. Our boat was in Turkey when we bought it. And we were told, do not fly an American flag there because they will, they don't like Americans. And
early 2000s too.
Yeah, this was 2000. Well, no, it was 2011 or 2012. So, they said, don't fly an American flag there. You don't want that. Don't let anyone from Turkey know you're from America. And so we get there, and because so many boats in Turkey, they register them in the US, you have to fly the flag of the country you're in and where the boat's registered. So every single boat in Turkey was flying an American flag. You would have stood out if you weren't flying an American flag. And so, it's just so funny. We get off, and just that was the first thing we noticed. But this idea, everyone said, oh my gosh, if you go to Turkey, you got to be careful and you got to do this. And the flag was just so funny because it's like, there wasn't, we're looking around the marina and it's like, who's not an American here, So that was.
Well, I got a funny story for you. So one of the things that you learn in that vagabonding book is that, fear sells. And unfortunately, how media makes money is with advertisements, and how they get advertising dollars is the amount of eyes that they have on their broadcasts, right? So anytime you see anything on like a generic media site, it's typically skewing towards fear mongering. And here's a counterpoint from the United States. So I'm traveling around some pretty rough areas in Central and South America. And every time I tell them I'm from Chicago, automatically their mouth drops to the floor and they're like, it's just, you're living in constant gunfights. Everyone is having gunfights on the streets. Like,
I think I hear gunfire behind you right now, Fernando.
Yeah. And so it just shows you, like, I feel extremely safe all the time in Chicago. And to hear someone in a favela being like, how do you live in Chicago? And how do you not just Swiss cheese right now? I don't understand. And that just goes to show you, like, everything that gets exported to other countries. It's not like, oh, look at this amazing puppy parade that Mexico City put on this weekend. It's like, oh no, this year, cartel killed 1,000 people in this one tiny location that no one ever goes to anyway. So you got to be very careful with media bias, because truly most of the world is a very safe place to go. There are obviously some areas that you should not go at any given time. But again, it just feeds into that narrative. And it sucks that as humans, we like to generalize things to the point where it not only do you generalize an entire country of, say, 200 million people, but then every person that comes out of the country, you also think falls under that same generalization. That's like such a terrible thing. If you ask anyone, what is a typical American, and what they describe is going to be nothing representative of you or anyone but that's all they know because of the fear mongering that comes out of the media.
Yeah. Such a great point. And I remind myself of this all the time. It's one of the reasons I stay off of the news. And social media just makes it worse because the incentive structure for social media and even legacy media is engagement is what they're looking for. They're not looking to inform. They're looking to engage. And the best way for them to engage is to either scare you or make you angry. And that's why, the loudest, scariest, most divisive voices are the ones that rise to the top. And those of us who are just kind of like, okay, we're here like, oh God, I don't want to speak up out of there and get my head ripped off. Yeah. And it is such a great point about like our perception of the world. I lived in San Francisco and for 2 years. And I mean, of course that was too long ago. And, but everyone's perception of San Francisco is like, oh my God, you can't walk on the street without stepping in human feces and, and needles and blah, 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 blah. And yet, and San Francisco, look, it's got some tough areas. It's going through a tough time right now. But like you talk to somebody who lives in San Francisco, and I have friends who live there and they're like, what? Yeah. Like we're fine. I mean, it's just, great stuff. So I'm trying to think of how to segue here. Another great book on this whole lifestyle, At Home in the World by Tish Oxenreider, TSH, Tish Oxenreider. And she talks about traveling with her family for all around the world with young kids. And I think it's important for people also to remember that travel is not nearly as expensive as you think it is. And when you guys lived on the sailboat, you lived on how much per month? Like what was
there was 8 of us. Eight people. These are the highlight numbers here. 8 people, 350 square feet for almost 4 years. So our family became very, very close in lots of ways. But my dad is my business partner and we still work together. We've been working together for about 11 years, almost 12 years now. And we could talk a whole bunch about just the struggles we went through, but we learned how to communicate with each other, which is pivotal in this business. We learned how to communicate. We communicate every day, obviously, but talking about deals and stuff, and just all the aspects of this business. And so, our family of 8, we lived on roughly about $1,200 a month, in food, and we didn't have. You didn't have a car, no insurance. It was just a very basic, very simple life that we were living. But we were living in Greece. We got to travel all around the Mediterranean, and it was an incredible experience. And so, but it wasn't expensive. I mean, that's cheap.
That's about that's about kind of what I'm at. My monthly burn rate when I'm abroad is about a third of what it is when I'm living in Chicago. But I'm living probably 3 or 4 times larger. I mean, I'm going out to eat 2 times a day, Uber Blacks everywhere, and it's still a third the cost. It's crazy. I mean, that's one of the things about income arbitrage is, the US, we earn really well, but we burn even better. Right. And if you can, today, I'd gladly take a 2/3 cut of my salary and go live somewhere else and still have a more fulfilling life, as long as I'm still paying for things in dollars, right? That, for example, $1 into Mexican pesos is 18 to 1. $1 to Brazilian real is 5 to 1. $1 to Argentinian peso, it's almost 1,000 to 1. So, and then that's obviously just conversion rates. It's not purchasing power parity, but it's still, the parity is amazing.
So what do you've obviously done a bunch of travel. What's like on the bucket list? If you had, I'm sure you've got a few trips in mind. What's on the travel bucket list of these are the trips I want to do in the next several years?
Yeah. So this year, end of September, I'm going to do Central and South America. Hit all the countries I did not hit the last time I did that stretch. The year before, I did all of Western Europe. So after this year, I'm either going to do, so in 2025, I'll probably do either Eastern Europe or Southeast Asia / Australia. The nice thing about traveling a lot and staying in hostels, you end up making so many friends on the road. So you should see my WhatsApp is just like blown up with the amount of friends I have. And it's always like, hey, I'm going here, I'm going there. I was like, I know someone from there. Like, can I come stay on your house that's on a vineyard in, 4 hours inland to Sydney? And then my buddy Chris would be like, yeah, come on down, So you're building
your bench list of couches to sleep on globally.
That's right.
The list is you got self-storage coming in over here, properties to buy, and then you got couches to sleep on over here.
That's right.
I love it.
So I think my last question, let's tie this up. Well, no, I got one more question, then we'll tie it up.
Okay.
Cause we could go on for another hour. But our marketing manager actually had this studio booked an hour ago and she's blowing me up.
Sorry. Hey, sorry.
Yeah. We've been having fun. So first of all, first question is, do you still have a home base in Chicago that you're keeping full time, or are you just like renting an Airbnb for 3 months?
Yeah. So no home base, because then that would negate that, that income parity or that income arbitration, because, in Chicago, if I wanted a 1-bedroom apartment, easily it's $2,000 a month. Right. So and then if I'm not going to be using it, and I don't want the stress of having to deal with Airbnb and potentially things happening. So absolutely not. Gave away all my stuff. When I'm here, typically my parents are abroad. So I'll either stay at my parents' house or I'll stay with my brother, or I'll go on, there's a website called Furnish Finders. It was originally made for travel nurses. So it's cheaper than Airbnb. It's a little bit more expensive than, let's say a year lease, but it's furnished. You can stay for 6 weeks to 6 months, whatever you need. And then that way you don't have to, my whole thing is I'm trying not to accumulate possessions. And when you have a fixed location, all of a sudden you start filling the space that has been given to you. Right. So no home base.
You are a true nomad.
No,
I hope you realize this.
Yeah.
I'm hearing true nomad through and through. And
That's right.
I'm just saying.
Yeah. We're going to send you some swag.
There you go.
Yeah, absolutely. Yeah.
Send me a new duffel bag. Mine just ripped on my last trip back from Austin last week. So the zippers are totally messed up.
Right.
Okay, we'll work on that.
Challenge accepted. So we chatted a little bit before we started today, and you talked about some of the ways you like to give back. We also chatted on the previous episode about you're very giving of your time for self-storage investors who want to understand how things work. But how else do you like to give back outside of the self-storage industry?
Yeah, I mean, man, I am such a fortunate person. It's crazy, especially with the world travel, when you see how much less people have than we do. It like just doesn't make sense for me to hoard the things that I have, because it's not helping anybody, right? So about 5 or 6 years ago, my bank, or I guess maybe 7 years ago now, my banker asked me if I'd like to be a director for a nonprofit called the Neighborhood Boys and Girls Club. So it helps kind of create after school programs, and it's a safe place to do studies and extracurriculars to kind of keep kids, at-risk youth off the streets, right? And anything having to do with education has a special place in my heart, because I feel like education is one of the only ways that you can break cyclical poverty, generational poverty, is to get educated. And that doesn't mean you need to necessarily go to college and get a 4-year degree. Maybe it's trade school. Maybe it's learn how to be an entrepreneur, but some type of education. So that was a huge piece for me. I love working with Neighborhood Boys and Girls Club. Actually, our golf outing is coming up on September 23rd. That's the only thing that's keeping me here after my brother's wedding. So after, I probably will jump on a flight at O'Hare on the 24th after the golf outing, or maybe the 25th, depending on how hungover I am. And then last year, my construction manager, Eric Platt, very amazing guy, really fortunate to have him on my team. He lives in Ohio, and he became the president of the Cincinnati, or the Children's Dyslexia Center of Cincinnati. I remember there's a lot of C's in there. So he asked if I'd like to come on and be a director to help raise money for that as well. And it aligns again with my passion of bringing education to those that are less fortunate or may have difficulties with that education. So dyslexia, for those that don't know, it's a condition that makes it very difficult to absorb information, not necessarily just reading, but there's other issues with it as well. And that could set people back in their educational journey. So just join that as well. I happen to be a very good capital raiser. And when I'm trying to raise capital for children, as opposed to for some random self-storage deal that doesn't really matter, it's actually a lot easier, because then I could really guilt people and poke them and say, hey, this is for the kids. Do you really need this $500 so much? Like, come on. And so that has helped a lot. And then getting to see the results of those capital raising efforts, and seeing, in Neighborhood Boys and Girls Club, we send a bunch of kids to school with scholarships every year, Dyslexia Center, helping people get through, their K through 12. It's really amazing to see. So those are kind of like the formal things I do. When I'm traveling abroad, in the United States, tipping culture is pretty messed up, and either direction, people don't get a living wage, but then also everyone's, somebody gets you a latte and then they ask you to put a 25% tip on. So when I'm abroad, I actually carry a lot of small bills, both in dollars and in local currency. And anybody I see that is, struggling, but is working, and Uber drivers and waiters and people on the street, especially in South America, we've had a lot of, just like here, a lot of Venezuelans escaping that regime and trying to start anew in other countries. So I just try to help out where I can. Obviously, I guess I call it unofficial, because it's not, you can't write it off, but it's still great to give back. And then the biggest thing for me is where I think I could add a lot of value is like right here in between my ears. I love to read. I love educating myself on many topics and building businesses. And if I can help somebody become a business owner or start their first venture, or point them in the direction where they can change their life through education or through entrepreneurship, I love to do that. So if anybody ever asks me, every time you meet somebody, one of the very first questions they ask is, where are you from? And then what do you do? And so the what do you do part is when I can segue into being a business owner and how I love to help other people also achieve that goal. And if somebody wants my help, I always give them all my contact information. Like I said on this podcast, I give out my cell phone number. So it makes it easier for them to contact me. And if I can, kind of the whole give a man a fish versus teach a man to fish. If I could teach you how to support your family through running a business, that's a lot better than me just giving you a $20 bill on the side of the street or something, right?
Well, listen, Fernando, this has been fantastic. I always enjoy connecting with you, my friend. We got to get, I know Wilmington's not as exotic as some of the locations you're going to, but we got to get you to come by and let's connect down here. You're welcome anytime, my friend.
I actually may be out your direction here before I leave. I have a project in Charlotte that Live Oak Bank will be financing. So I'm going to have to fly out there. And then afterwards, I actually was planning on going to Wilmington to take out my lender, Anne, for dinner. Assume she closes the deal. And if you're watching this, you better close it first or else you don't get dinner. So I'd love to come by and say hello to you guys.
But please reach out. Let's connect. We have some hospitality that we have at the beach, and we would love to put you up there and connect with you.
Awesome.
So please
be great.
Reach out and connect after this.
Better than a couch, I can tell you.
Yeah.
I'm easy to please.
Yeah. Well, listen, let's wrap this up again. If you didn't hear on the last episode how to contact Fernando and you're just checking on this, Fernando, if any of our people who've listened to you chat for the last hour want to reach out to you, what was the best way for them to do that?
Call or text me on my cell phone, area code 630-408-8090. That number does work internationally. And if you don't want to, that's a little too aggressive of a contact method, you want to do something more passive, feel free to go to our website, ssse.com. And you can get a hold of us via email or schedule a call, whatever you want.
Sounds great, man.
Thanks for having me as a guest.
Absolutely.
I'm the
he's
second
normally
guest.
he's normally not on the host, but I wanted to bring on. That may change. This has been fun.
This has been great.
A lot of fun.
Fernando, it's been an absolute pleasure getting to hear your story. You're on an awesome path, and it's going to be really exciting to see where you go and what you do over the next couple of years. And I think it would be good people know good people. And who knows, maybe we'll be able to do a project together with you in some capacity someday, but you're on a great path. Love to hear your heart behind the things that you're doing this for. And thank you, Neil, for letting me be a part of this fun time.
Cool. Thanks, man.
Thanks, guys.
See you.
Thank you so much for listening and watching the Truly Passive Income podcast. If you liked the show, if you think it would be useful for someone else, the greatest compliment that you could give us would be to share the episode, leave a comment down below, or leave us an honest review. If you have any questions, don't hesitate to let us know down below. And remember, with truly passive income comes freedom of time, place, and the freedom to pursue your higher purpose.